Hey guys, you haven't seen me in a while. I've been posting really inconsistently, and in fact, it's been almost 2 years since my last update video. What I do on this channel is share my tax-free savings account on Wealthsimple Trade as a beginner investor with no experience really. I started this account back in November 2020. Actually, a little bit before that, I made my first video in November 2020, which a lot of you seem to like. At that time, I took all my money out of a mutual fund that wasn't really doing all that great. I did make a profit on it, but there was a lot of expenses and it wasn't growing at the rate that I wanted it to. The timing was perfect. How would I have known? I took that money out and then put it in when everything was really low because of all the scary things going on with COVID. Nobody knew it was happening, and I earned off of that bounce back like a lot of people did. So I'm going to share with you now that screenshot of that video from November 2020 where the account was at $19,700 and percentage wise we were up almost 17%. Look a lot different there. I had a mustache but no other facial hair, and I was wearing an Under Armour hat at the time as well. Let's jump to the last video that I shared with you, which was back in March 2023. We were at $52,921, all time up 19%. And now let's look at today. We are up 33% at 110,000. Pretty happy with that. But I can't attribute that to anything that I did specifically because everybody's been doing good lately. The last 2 years, if you've been investing, you've seen gains like this and probably even bigger ones because you didn't make the same mistakes that I did. I was chasing the yield. I wanted to build a huge dividend portfolio that was just going to keep generating its own income, that I'd be able to keep reinvesting, because eventually I'm going to hit that limit, my contribution limit with the TFSA. I'm not there yet, but I will hit that limit this year if I contribute at the rate that I've been contributing. So what I did was this mistake, learn from it. I put too much money into these real estate investment trusts. I thought I knew what I was talking about. I thought I knew about occupancy rate and lease terms and all this other mumbo jumbo, but I was not paying attention to the companies that I was investing in. And that occupancy rate fell. The leases were not renewed because guess what? People started working from home. So these office real estate investment trusts like TNT, that's True North, Innovalis, and even Northwest Health, they cut their dividend, the stock price plummeted, and for each one of those, I lost over $1,000. It was a painful learning experience, but overall, we're still up. So that's the positive side of things. And the ones that stuck around are smart centers. The difference there is it's not an office real estate investment trust, it's a commercial one. And you'll see those signs with the penguins on them everywhere, in Walmart parking lots, in Costco parking lots. They own a lot of retail space. So you know that the money is going to keep coming in for them. I hope that that's not a bad assumption to make. So what I've been trying to do lately since my last video is slim this down. I've got way too many positions. I have over 35, and there's no way that I'm keeping track of all those companies and how they're doing and what's, the prediction, what analysts say is going to happen. I'm not doing that. I don't have the time or the interest in doing that. So I've been selling things off little by little and putting more money into ETFs, which is a more relaxed set it and forget it. You kind of cast a wide net and then you get gains. They're not as dramatic as if you were investing in individual stocks like Nvidia or something, but there's less risk. So let's look at some of those ETFs that I've chosen. XUS tracks the S&P 500, XQQ, the NASDAQ, and that one is a new one that you can see I've only got 5 shares in that, but it's something I'm going to start adding more and more to. XIU is the top 60, and then XHU is one that tracks high US dividends. XEI is S&P TSX Composite High Dividend Income ETF, and then this other one, VIDY, is excluding North America, but it is another dividend one. One more I'll point out too is CHPS. That's a global semiconductor index, and that's pretty important right now with AI and tech and everything. And if you look at the holdings within that ETF, it's got Nvidia and ASML. ASML is a company that kind of has a monopoly on this machine that makes chips. That's what I'm working with right now. Let's look at Track Your Dividends. This is a nice free website. It's a little annoying that you have to update it manually, but I'm not interested in paying for anything Wealthsimple Trade is free, and that's what I'm after, free stuff. Annual income, $4,000. I like that it shows you that. It also shows you your yield on cost for your portfolio. And then you can look at the yield on cost for the individual stocks as well. Sort it however you like. You can see the annual income. The biggest payer for me is XEI. And besides this, it also will show you your upcoming dividends. There's a tool to look at future value. We're going to break a record here in my tax-free savings account this month. January 2025, we're bringing in $600 in dividend income, which is fantastic. If you scroll down on this website, you can see calendars that give you your payouts. The darker the green, the bigger the payout on that day of the month. And another thing that I've been tracking manually, I'll open that up right now, is just with this little spreadsheet here. I've been tracking month by month what the dividend income is, and then a total for the year. And you can see it on the little graphs or the charts over here. So back in 2022, it was $1,700 for the year. In 2023, we were at almost $2,900. And then last year, 2024, $3,600, with our biggest month being $437. And already in the first month of 2025, we've broken that record by a lot. That's it for this video. I've kind of changed up the format, changed up this isn't a real house. You can see my arm disappears when I go over here. This is a green screen. It'll make it easier for me to edit. But I do want to share one more thing with you, and that is my link for Wealthsimple Trade. If you sign up using my link, we'll both get something like $25. If you're interested in starting investing, you don't need to start with a lot. You can start with a few $100. And the benefit of Wealthsimple is that it's free. There's a lot of other things too. Once you pass $100,000, you're a premium client, and the perks get better and better the more that you put in. And no other trading platform is doing this kind of stuff where they give you these kind of perks. Questrade charges you for the trades. A lot of the ones that are run by the banks that will charge you per trade. So that's why I chose to go with Wealthsimple, because who doesn't love free stuff? So yeah, if you are thinking of investing, please sign up using my link in the description and we'll both benefit. So I'll see you guys in the next video. Thanks for sticking around. Bye now.